Form 1099-K is a seemingly unknown form, but it's actually caused a lot of hysteria over the last few years with proposed law changes, actual law changes. In this video, we're going to talk about how those law changes came about, how the OBBBA, the One Big Beautiful Bill Act, changed the law again. I'm going to talk about how this Form 1099-K affects international taxpayers, so people investing outside the U.S., having rental properties outside the U.S. I have a lot of clients that come to me with IRS notice or even IRS audits showing penalties that they have to pay back because of this Form 1099-K. In this video, I'm going to tell you how to completely avoid getting audit notices, penalties from the IRS because of your Airbnb activity outside the U.S. My name is Alex McGowan with McGowan Tax, where we provide practical international tax solutions for small businesses and individuals. So before we get into some of these specific rules and how it affects international taxpayers, I want to set the stage a little bit for what this 1099-K is, when it's required, and how the rules have changed. So the 1099-K is pretty similar to the other 1099s I'm sure you're already aware of. You know, there's 1099 NEC for self-employed people, 1099-B for financial transactions like capital gains and things like that. The 1099-K is a similar form, but it's provided by third-party payment processors like Cash App or Venmo or Airbnb, or like for my business, I use Stripe to process a lot of the payments and invoices I send to clients. So it's like the other 1099s where those payment processors will take those transactions, they send one copy to the IRS and one copy to you. So the IRS then knows what transactions you had through them to make sure that you're reporting that income correctly. Now, just because you don't receive the 1099-K doesn't mean you don't report your income, of course, but it does add another layer of administrative burden, both to the third-party payment processor and to you, to make sure you're matching it up correctly. And in a lot of cases, you know, people that use Venmo or Cash App, that might not actually be income. Maybe they're just transacting or paying money to friends or something like that, where it's not really business income. The way the rules have worked in the past has really had a pretty high threshold to where it's really just actual businesses and rental properties that are having to file this and are receiving this Form 1099-K. What's important to remember and understand is just because you're using a third-party payment processor like Venmo or Cash App, that doesn't necessarily mean you're a business and need to be reporting this income to the IRS. And that's one of the problems with this form in general. But in the past, it hasn't caused a problem for those type of people because the threshold for receiving that 1099-K has been so high. So prior to 2022, the transactions with a specific payment processor like PayPal or Cash App would have to be more than $20,000 before they actually sent you the 1099-K, which would require you then to make sure you report it to the IRS, or else you would get an IRS notice or even an audit for not reporting that correctly. So that didn't cause a problem until 2022, when Congress came out and changed that limit from $20,000 all the way down to $600. So you can see where people that may not even have businesses who are transacting through these payment processors could start to receive these 1099-Ks. To be honest, it wouldn't take many dinner parties to get over that $600 limit, right? So once you receive those, you have to report that to the IRS. It creates a huge administrative burden for the payment processor as well as to the individual, and also to the IRS, because now they're going to have to start sending notices out. They're going to have matching issues that they're going to have to work out with taxpayers. So Congress came back out and said, okay, fine. After a bunch of hysteria, really, and feedback from the public on these rules, they decided, okay, we're going to push this out into a phased approach. So they said in 2024, they're going to drop the threshold down to $5,000. And then in 2025, it would go down to $2,500. And I think it went out for a total of 5 years where they eventually get to the $600 threshold. So that was a better approach, but we were still going to ultimately get to that bad situation of the $600, right? Luckily, the One Big Beautiful Bill Act stepped in this year and said, effective January 1, 2025, we're back to the $20,000 rule. So now we don't have to worry about these non-business transactions getting scooped up into the 1099-K rules, and we're back to the old rules, which is great news for really everyone involved. But if we're back to the old rules, why does all this matter? Well, to be honest with you, I saw a lot of problems with international taxpayers in particular, even with the old rules. So what I want to walk through is what's the specific situation that I was running into with clients a lot. If you're liking this video, you should really check out my newsletter, where I put out different tips and tricks, latest law changes that can really help you save money and save complexity if you're living or investing abroad. Just think how much you could save with the right tax advice. I had a lot of clients come to me with IRS audits, IRS notices. They were getting penalized for not reporting their foreign rental income in line with the Form 1099-K that they were receiving. And they were receiving more than this $20,000 on these rental properties. So now we're gonna walk through how we avoid that once and for all so that you're not receiving these letters and notices and IRS penalties unnecessarily. So we've talked about in a bunch of other videos how to structure foreign real estate. You can do it through a foreign corporation, a disregarded entity, you can own it directly. It really just depends on your specific situation and the country you're in particular. But in this case, with the 1099-K, the problems generally come about when you're investing through a foreign corporation. So just to give you a specific example, let's say that you set up a Costa Rican limited liability company, what they call the SRL. That company is going to default to a foreign corporation. So if it's a foreign corporation, the IRS looks at it as a separate taxpayer. You're going to report the rental income on the Form 5471, and then we have to play with these goofy rules like Subpart F and GILTI to see if we have to pick up that income on your personal return under an anti-deferral rule. But the point is that the regular income and expense of the rental property is not flowing up to your personal return. Now, when you set that company up, you're going to want to rent that property out through Airbnb or VRBO or something like that, right? In particular, so you can get that great short-term rental income exclusion that we've talked about in this video here. It might not even be possible to do that through the foreign company. You need to have an individual taxpayer as the owner of that account. So you'll set that up as a US citizen. Well, now Airbnb thinks you're the one renting it out, not this separate company. So at the end of the year, if you cross that $20,000 threshold, which really isn't that much if you're talking about a full year rental that you're doing, it's going to trip that threshold. And now you're going to personally receive a 1099-K with your name, your social, and the income on it. So if you go then and do what the correct thing from a tax perspective and put that rental income on your Form 5471, it's not flowing up to your return. You're going to get a notice from the IRS. They may audit you, and now you have penalties coming, and you're going to be dealing with a lot of back and forth unnecessarily trying to get that problem fixed with the IRS. The solution to that problem is to make sure you still put that income on your personal tax return. What I personally do is I'll take that income, put it on a Schedule E, which is your personal rental property schedule on your tax return. That's going to match with the IRS so that they know, okay, this guy's reported his income. And then we're going to back that number completely out as an expense. So there's no net income on your personal return from that. And then we go report that on the 5471 like you're supposed to. Sometimes I attach a statement just to explain what we're doing, although I'm not convinced the IRS actually reads the statements that you put on the tax return. But that's just an extra layer of security if you want to do it that way. But the point is, you have to put something on your tax return to match that income, or you're going to have problems with the IRS. So that's a quick summary on what the 1099-K is, how the laws have changed it, what the One Big Beautiful Bill Act did to get us back to the old rules. But just remember, the old rules still had problems too, and you have to make sure you're reporting these things correctly on your return to avoid problems with the IRS. If you have questions about your international tax filings or tax return situation in general, reach out to us at McGowanTax.com, and I'd be happy to have a cross-border tax diagnosis with you.